Hey everybody, Aaron Dillon here, Managing Director of AG Dillon & Co. We're a venture capital firm focused on pre-IPO companies with investment funds for individual investors, family offices, financial advisors, and institutional investors. All right, so I got a pre-IPO company update for you here for the week ending 17 March 2023. Today we'll hit on big company news from Tiger Global, eToro, Checkout.com, and a new segment we call Tyler's Corner. Large capital an individual pre-IPO company stock performance update. All right, so some venture funds are starting to mark down their pre-IPO holdings in their portfolios. A lot of discretion on how they mark their holdings to market. Many managers leave the marks at cost basis, and this is fine if the pre-IPO stock is going up in value, but it's problematic if the stock's going down in value, as they have been over the last 12 to 15 months. Tiger Global, the huge venture capital fund and hedge fund shop, marked their portfolio down this week. It's one of their venture fund portfolios. These guys are really active in the pre-IPO stock market, so understanding their marks is really important in my opinion. So Tiger marked down one of their venture fund portfolios by 33% or $23 billion. This compared to SoftBank, which just marked down their Vision Fund 2, excuse me, by 30% or $48 billion. So those are big numbers to come down. Preferred shares are more important than ever now. Preferred shares have a liquidation preference. So that means that the preferred shareholder is guaranteed some level of return before other shareholders lower on the cap table are paid out. So basically, this means that if you own common shares and the pre-IPO stock is down 50% plus, you could end up with very little or nothing back return for your investment, especially if the pre-IPO company has debt too. So cap table hierarchy is debt, then preferred stock, then common stock. So this preferred share nuance might be the reason why Tiger is only down 33%. They own a lot of these preferred shares versus the public's, kind of small cap tech stocks, which many are down 50% or more. Okay, eToro pulled in more capital this week from an advanced investment agreement or AIA. It was $250 million in the $3.5 billion valuation. An AIA strikes the terms of a future investment into a company today. So eToro's AIA said that the investment would happen in 2 years if the following things happen. One, eToro did not complete the SPAC transaction that they were set up to do. Or two, they didn't raise any additional capital. So the investors included in the round were Ion Group, Social Leverage, shout out to my boy Don Needy, SoftBank, and Spark Capital. eToro has $5.8 billion in assets under administration across 100 countries. It's incredible. Total funded accounts of 2.8 million, and it generated 631 million in 2022 commissions, which is the company says is pretty close to their total revenue now. Okay, checkout.com now offers debit card issuing, both virtual and physical cards. Checkout's Chief Product Officer, Marion Kolbecki, said card issuance and embedded finance have exploded over the past few years as sectors like online travel, marketplaces, and digital banking use payments to stay at the heart of their customers' financial lives. Checkout.com issuing is built an open, flexible APIs. That means businesses can create purpose-built card programs, enhance cash flow, and unlock new opportunities. So what does this exactly mean? So like say you're an online travel agency and you sell vacation packages. If a user buys the package that includes airline, hotel, and car rental, they pay you with a credit card for the whole thing, right? And then you, the company, right, use the virtual debit card to purchase the airline ticket, book the hotel, and pay for the car rental. So you pay acquiring fees to the bank when you use the credit card, and the user initially buys the vacation package, but you earn interchange revenue when you purchase the airline ticket, book the hotel, and pay for the rental car. So it's not a one-for-one expense to revenue offset from the acquiring and the issuing interchange, but it eat away at a healthy portion of the company's bank fees. All right, and now a very special segment from Tyler Siconolfi, an AG Dillon & Co. research analyst. Tyler has 3 notes for us today. First up is Revolut partnered with Comic Relief to make it easier for Revolut customers to donate to those living in poverty. Comic Relief is a poverty-focused charity in English, so hats off to the folks over at Revolut. Rippling raised $500 million in Series E in just 12 hours from Green Oaks. It's a longtime investor of the company. The money was used to help Ripling's customers pay employees that did not receive paychecks due to the SVB failure. So if you remember, they went down on like a Friday and paychecks were supposed to go out. So Rippling did right by their customers and doing them, getting their payroll out on time. And lastly, SpaceX CEO Elon Musk announced that they will perform their first orbital test flight of Starship in April and is awaiting FAA approval. I heard it's going to go off on April 20. So fingers crossed on that. Starship has 3x the payload of Falcon 9. That's the SpaceX rocket that went up 60 times last year. Okay, big capital raises for the week. Stripe pulled in a $6.5 billion at a $56.5 billion post-money valuation to address employee RSU issues. This move takes care of their employees, but also gives Stripe another several years to remain private. It'll be interesting to see what the management does in the coming years. I'm calling Adept a new unicorn. The company raised $350 million Series B at $1 billion valuation. Adept aims to build a personal AI assistant that you can speak to, and it will execute commands on your computer. That is awesome. I want it, right? Prize Out and Page also had big raises for the week. A $160 million Series C and a $20 million Series D, respectively. Okay, last up, we got pre-IPO stock performance. Pre-IPO stocks were down 3.54% for the week versus the S&P 500 up 1.36%. Not a great week. Year-to-date pre-IPO stocks still trail the S&P by about 8.5%. Not much movement. Year-to-date numbers, OpenSea and Kraken, unbelievably, are both up north of 20%. I don't know how that happens with everything that's going on in crypto. Stripe, Airtable, Epic Games, and Chime all down 20%. No big winners. Really, Kraken led the pack up 43 basis points. And Brex was down 17% for the week. Deal was down 14%. And Revolut was down 6%. Right, so that's it for this week. If you have any pre-IPO stock research needs, please reach out. I'd love to dive in with you. We also have 2 funds available for investment right now. For SpaceX-only exposure, visit agdillon.com/SpaceX. The big rocket Starship is launching soon, and their satellite internet business Starlink is scaling fast. So it's a great entry point to get into SpaceX, in my opinion. We're seeing north of 3x, 300% return on that stock over a 5-year period of time. And we've raised $3.4 million to date, and we aim to close the fund in mid-April. And for diversified pre-IPO exposure, check out agdillon.com/top15. That's SpaceX, Stripe, Canva, Instacart, Epic Games, Discord, and Plaid, etc. Thanks, and I'll see you guys all next week.